UnivStrategy.com.
Hi, this is Chris again, looking at the upcoming Friday, August 15th trading session. In front of you is the economic calendar, and you can see that we have the UK's GDP numbers year over year for the second quarter preliminary coming out. It's anticipated to be 3.1%, and with the pound and the FTSE both taking a bit of a beating recently, this will in fact be a very important number right away. In fact, the pound formed a nice looking hammer during this session on Thursday, so quite frankly a bounce with a better than anticipated number probably is a given. 1.68 above though is pretty resistive, so I don't think we'll break above there, but it could be a nice short-term buying opportunity. If we do in fact come in way under, it's a shocking miss. Expect the pound to sell off and probably head to 1.65 pretty quickly. The next announcement that I'm looking at comes out of Canada. The net change in employment, or the unemployment numbers if you will, expected to add 20,000 for the month of July, just as the unemployment rate numbers are expected to come in at 7.1%. This should have an effect on the Canadian dollar forex pair. We found a hammer at the 1.09 support level during the day on Thursday, so it does look like we have a proclivity to go higher anyway. A break above the 1.10 level would be very bullish for the pair and sends us in more of a longer term buy and hold situation. I believe that the dollar CAD will rise during the session anyways. This could be fuel to the fire, so to speak. That being said, we look at the rest of the day, and the next two things that I'm paying attention to are the tick numbers, long-term flow tick numbers out of the United States. If they are less than anticipated, that shows that people are not buying bonds. That can be negative for the US dollar. That's more of a put it in the back of your mind type of thing. It's probably not something that can be traded right away. Industrial production could move the stock markets, but really I believe that the number of the day in the United States will be the U of M confidence numbers. Anything under 82.5 could be bad for the stock markets, but then again, better than anticipated confidence could be very good, as the S&P 500 recently has broken above the 1950 level, which in my opinion is rather bullish, and probably since looking for 1990 again. Pullbacks should offer buying opportunities as well anyway, so even with a slightly disappointing number, we could get a short-term pullback that makes the S&P 500 an attractive buy for the session. Speaking of the S&P 500, I have the chart in front of you, and you can see that we did break above the 1950 level here during the session, and now I think we're probably going to re-enter this consolidation area. I don't anticipate we're going to go to 1990 in one session, obviously, but we are going to go back into the consolidation area, so I think we have more of an upside bias. The downside is protected by not only the 1950 area, but the uptrend line. Any pullback at this point in time, I think, just simply invites more buying. Ultimately, I do think we make a run at the 2000 level, which 1990 is the beginning of significant resistance. Looking at the British pound, you can see the aforementioned hammer that I had spoke of. If we break the top of the hammer, that's the 167 level. Good numbers out of the UK could in fact cause that to happen, but I think 168 is going to be a bit too much. So really, this is a short-term buying opportunity on good British numbers coming out right away for the GDP numbers. Looking at the FTSE, it has been beat up, but we've had a significant bounce. Right here at 6,700, for my opinion, is resistance. Good numbers send us above there. Bad numbers could pull back, perhaps offer a buying opportunity depending on how bad they are. This is one of those situations, if we break out, great. If not, it's probably best left alone for the particular session. Looking at the euro dollar, you can see we tried to rally again during the session on Thursday and failed yet again, forming a shooting star just above the 1.3350 level. I think it's only a matter of time before we break down below 133. We certainly are trying. I think 135 is the absolute ceiling in this market. And quite frankly, even 1.3450 offers selling pressure, as does 1.34. You can see we keep trying to rally and we keep selling off. If we get a rally in this pair, look to sell it late in the day on any signs of weakness, as it could provide a nice short-term selling opportunity. And with that, I have looked at the upcoming Friday, August 15th trading session.